Meta Platforms is the most valuable stock in my portfolio. And twice a quarter, I take a look at the stock. I look at potential threats that are either happening in the next 12 months or maybe down the road that I should keep an eye on, as well as opportunities the company is trying to capitalize on. I like to look at the financials, which I do every quarter when they announce their earnings, but just slow down and look at them more carefully and look at more metrics of what their business is doing. I also like to see other pieces of data, like which super investors are invested in Meta and what are they doing with Meta. Meta is held by many, many big investors, and a list of them is here. Robert Vinal is a big investor. He owns 19.5% of his portfolios in Meta. Chase Coleman, a big portion of his portfolio is in Meta. I believe he was an early investor in Meta. Pat Dorsey, one of the guys that I think very highly of. He has a very good book if you're interested. He owns 16.22% of his portfolio in Meta. It's really been a important part of my success in the last few years is Meta's performance from a stock appreciation perspective. Overall, in this video, I'm going to go through and I'll give you the conclusion now, and then I'll reinforce why I feel that way. Meta will continue to be one of the most valuable stocks in my portfolio, depending on how much it goes up. It's going to be between Meta, Google Alphabet, Uber, Robinhood. If one of those stocks really takes off, it'll probably take the most valuable spot in my portfolio. Meta definitely is a buy. It's discounted, and I'm going to share that with you. It has a very strategic business, and I'll explain that as well. So overall, I'm very positive on Meta Platforms. There's also the opportunity to learn some lessons from Meta Platforms and study what makes them so valuable, what made them successful, what make them very different, and have the ability to have a strong moat. And go look for other companies that are going to resemble Meta in some ways, or maybe in a lot of ways, that maybe aren't as well discovered and known as Meta, and buy into those companies. That's certainly a process worth taking for me so that I could go find the next winner, go find the next big winner like Meta has been. So that's what I'll go through as well. So overall, I'm going to take my time in the video. This is a member video, and I really want to dig into Meta and reveal what I think is most important for me to keep an eye on. Hopefully you find it interesting. Meta's become one of the most valuable companies on the stock market with a market cap of 1.87 trillion, and the company is selling for a little under 11 times sales. And the P ratios are not too bad. 27 PE these days is pretty reasonable, and you'll see that Meta is growing quite well. So that's, in my book, a reasonable PE. And forward PE looks even better. It's a strong buy with a discount. And for the past year, Meta's gotten the job done, up 30.87%. And year to date, it's also done well. And the market's, it's about when and how you buy a particular stock that make a big difference. Just months ago, Meta was being sold for $484 a share. Incredibly, the market really discounted this stock in a time when the market was quite scary. We were selling off in the March, April timeframe. But that's when long-term investors that understand the value of a business, that's when we do our best work. And that's when buying Meta was a really good idea. You'd be sitting on a really nice gain for any shares that you bought in this time period. So knowing that you really like a business, in this case, Meta, you like it for good reasons. It's got really, really strong value. And then waiting for the market to do something irrational like sell off Meta, as it did in 2025, is long-term investing at its best. It's getting really good value at a really good discount. So that definitely was the case in 2025. Some things that I read up on from newsworthy that I wanted to pass along. Meta's looking to have an ad-free subscription offered in the UK. They may be testing out this idea, but I know I pay a fee for YouTube to give me videos with no commercials, which is great. And Meta is going to potentially do that here in the US. They're going to do it in the UK. That way people could avoid ads. And that'll be interesting to see if it works for Meta. If it works, then that's just one more revenue stream for them. They'll bounce that with advertising, but it might be something that makes the actual users stickier. They like the experience even more when they go on to Facebook or Instagram because they're willing to pay a few dollars a month since they're spending so much time on Facebook or Instagram. Pay a few dollars and then you have a better experience. That makes sense. Moving along, just to go over the financials of Meta, the business has been growing really well, and they're a big business, $178 billion of revenue, growing at 19%. That's astounding. Really, really good. Very profitable, high free cash flows. Let's take a look at the forecast. The forecast, 45 analysts are jumping in and saying, hey, I've got a price target on Meta. And on average, they believe, or I would say the consensus, is that the stock is discounted by 9.74%. That's a reasonable discount. We are trading in an expensive market. Last week, we had a little bit of a sell-off, but in general, I still think we're in an expensive market. And it's tightening up the discounts on companies like Meta. In this case here, it's a 9.74% discount if we use consensus. Really like looking at the forecast, and a lot of analysts are participating in putting their forecast data on Meta into this process. And the growth for the revenue is going to grow nicely. We've got 21% growth in the year we're in, 16% growth in 26, 14, 13. The business is going to be about 300 billion in revenues at the end of 2028. That's really, really big. And that's really, really good. And profitabilities, one thing to consider is profitabilities are not going to grow at the rate of top line growth. I think what's showing up is the AI build out. Meta is investing big in AI. They're trying to grow in that space. I think that's a really good idea in general. I think it's really good that they try to expand and really get the knowledge of how AI is going to be a part of the social app space and potentially create a new business. The Meta AI browser or experience, I should call it, I think could be a real positive move for Meta. So for now, I think it's going to take away some of the profits because they're investing so much into the AI business. They're also investing big into the glasses. The Meta glasses are supposed to sell, I think, 100,000 units in, I think, all of 2025. And when you think about that experience, I haven't tried them, but I've tried Oculus, and Oculus wasn't an experience that I wanted to do a whole lot. I bought a headset, actually bought it for my younger son, and he didn't use it very much. He used it a couple of times, and I've used it a couple of times, and it wasn't interesting enough for me to use it over and over again. But the glasses may be different. I did notice that my optometrist, they have them. They have them available. Ray-Ban Meta glasses. And from what I hear, the new set that is going to retail for $800 is capable of doing a variety of things. So we'll see. Maybe in 2026, I'll get a set and see what they're all about. Looking at research and development, which is exactly where the money is coming from for the Meta glasses and for AI, you see that they really have grown the amount they're putting into R&D. In 2024, after the metaverse really collapsed, they were really careful not to overspend in research and development. But now they're really putting money into it. It grew by 20% here as of June 30th, 2025. I think it's a good idea. Meta has to continue to, really push the boundary of what their experiences do. I'm completely on board with it. It's a good idea. It's not a bad idea. Now, looking at where they're getting their revenues, they're growing in the US, not quite as high as their overall growth rate because they're actually growing better in Europe, and the rest of the world is really going fast. And that makes sense. I know that, other parts like Latin America, those are huge Meta users, especially with WhatsApp. It's a really, really popular platform. The company is beginning to monetize WhatsApp, which is something they hadn't done in the past. I think the WhatsApp business could be a positive surprise on earnings if the advertising revenues from WhatsApp really start showing up in their financials. All right, so let me talk about the desirability of Meta, and I'll also use Charter as a comparison to Meta's strength of their moat, as well as their ability to grow and create profits and cash flow. So the quadrant that I've created here, I want to invest in businesses in the green, which are businesses that have the ability to keep competitors out of their market. They're in an expanding market. It's going to be bigger in 5 years. And the ability to keep competitors out is really important, especially if the same company is able to produce very high profits, very high cash flows, because they could protect those cash flows. They could protect those future profits by having this strength of a barrier to keep competitors out, a moat. And Meta definitely has that. You think about the network power that Meta has. You think about how that network power keeps people coming back to their platforms like Facebook and Instagram. It's a place where families stay connected. It's a place where communities stay connected. And that's just not going to change very quickly. It's very, very sticky. It's also completely digital. It's on everybody's device, whether it be a phone, computer, and it's expanding with AI. AI being maybe the next part of Meta that is going to be new. So I put Meta in the green because their moat, their network power is incredibly powerful. They have a terrific balance sheet, by the way. I haven't really covered the balance sheet, but they have an excellent balance sheet with very little debt. Their ability to grow, they're growing very fast. They're very profitable with gross margins at 85%, net profit margins above 30%, free cash flow margins above 30%. Those are just fantastic metrics. So that's why they're in the green. They're in the most ideal spot within their industry. Opposite to Meta is Charter Communications. And why are they in the red? Why do I deem them to be undesirable? Well, let's talk about their moat. Charter historically has been a cable media company within the same industry as Meta, same sector. And Charter has been losing customers because customers are cutting the cord. And Charter is competing with the likes of Netflix, YouTube, and the streamers are winning. The streamers are winning big time. So Charter really has no moat at the present time to keep its customers, subscribing to Charter on their cable networks. On their high-speed internet business, I think the situation's better, but they have a lot of competition from AT&T, Verizon, and a lot of other players. So there's no real moat there. And they're not growing. They're not very profitable, and they don't generate free cash flows. So Charter would be at the opposite end. Charter would not be a business that I follow, and I'm looking for opportunities to invest. It'd be very rare for me to buy a business in the red. It's just not, it's a place where capital goes to die, in my opinion. But Meta, on the other hand, or businesses that resemble Meta, are great businesses to follow and invest at the right times. So Meta is discounted by 27%. When I run the intrinsic value calculations using my modeling, I get a 27% discount. The cash flows for the business are just incredible. And I'm showing a 30% discount if I compare the present value of those cash flows versus the stock price. The earnings per share also provide a discount. So it's just really looking like a good stock. I think they're going to hit $1,000 a share at some point in the next 12 to 24 months. And if this stock price were to really sell off like it did in the March, April timeframe, I'd probably be compelled to buy some shares, even though this is the most valuable stock in my portfolio. I'm probably violating a little bit of diversification rules that investors should follow, but it's just too good of a company to let go. And you saw that some big investors, big famous investors, they have upwards of 20% of their portfolio dedicated to Meta. And it's not quite that much in my portfolio. I'm probably in the low teens with Meta, which is a pretty substantial amount. But I would consider buying more shares if the stock price really dropped. If I didn't own so much Meta, I would be buying Meta consistently, building this stock up. Now, I want to compare Meta against some other companies that really resemble their business, other social app companies in the United States. And the two that I'm comparing are Reddit and Pinterest to Meta. And FYI, I own all three and really like the fundamentals behind Pinterest, especially at the recent time. And Reddit's been a superb winner. But look at the 5 years, and Reddit hasn't been publicly traded for 5 years, by the way. But since its IPO, it's up 421%. So it's definitely received a lot of investment. And Meta's up 191%, which is excellent. Compared to the S&P, Meta most definitely is outperforming the S&P. Looking at the 1 year, things begin to tighten up a little bit. Meta's up 31% over the 1 year. Pinterest is just barely showing a gain, and Reddit is doing awesome. And looking at the year to date, Meta's doing well, Reddit's doing exceptionally well, Pinterest's doing okay, and then the S&P is doing fine. Over the past month, Meta's kind of pulled back a bit. We have had a nice sell-off this past week. Pinterest is really sold off, and Reddit continues to chug along, and the S&P continues to go up. Now, using Meta as the example of a really desirable business enabled me to buy into Reddit and buy into Pinterest. And Reddit especially, I was able to buy at a really, really, really good time. And Reddit was really sold off in the earlier parts of this year. You see that Reddit being in this light blue line, the market really sold Reddit off and really kind of left it for dead. And I just thought the market was being irrational. I was able to pick up shares of Reddit and pretty much have doubled my investment in the matter of months. So using that whole desirability stream of thought and establishing the type of business I want to own that resembles Meta, and then finding other businesses is really proven to be a really, really productive exercise for me. I'm now building a position on Pinterest because Pinterest has good rates of growth at 20%, very high profitability, very high free cash flow. Does that sound familiar? Therefore, I'm buying Pinterest and I'm building a position in Pinterest. Pinterest definitely could be an acquisition target because it's got a low market cap. And Reddit's already become quite big, but Pinterest has stayed kind of small. So Pinterest came out of this type of thought pattern. And within this sector, I've been really profitable because I'm chasing that elusive, desirable company that has a strong moat, high rates of growth, high margins, high rates of free cash flow. Now comparing Meta to the other big giant companies, the Mag 7, just the biggest companies out there, that really makes sense to compare. And comparing Meta to Google, Apple, Microsoft, and Amazon. Over the last 5 years, Meta's up 191, but Google's up nicely, 242. Apple's up, Microsoft is up, and then Amazon is up. So over the last 5 years, looks like Google is doing quite well, especially more recently here in 2025. And when we look at the 1 year, again, Google is the top stock, which is great to see because that was a stock the market irrationally began to really sell off with some stories that were floating around. And those stories are now beginning to evaporate. And Google is left with just an appreciating stock. But Meta's really been in a great spot at 31% in second place. Apple's lagged a little bit over the 1 year. Microsoft's done just fine. And Amazon has done okay. Year to date, the numbers are changing a little bit. Amazon is the laggard. That's a little bit amazing. I thought they would be ahead of Apple at least. And Microsoft, Google, and Meta have just done just fine. 6 months doesn't change a whole lot. Although Google, look at that move over 6 months. Terrific. More recently, looks like Google is really the stock that's really moved this year. And Meta's down a little bit over the last month. Apple's really made a strong move. Microsoft's held its own. And Amazon is really being sold off. Now, on this chart, I would volunteer that I am buying into Amazon. I think the market is being irrational with Amazon, or at least not paying attention, or paying attention to the wrong things. Amazon's an incredibly important business. If I were to put Amazon on the quadrants of desirability, they're absolutely at the best spot, because their e-commerce business is so darn important, powerful, and then their cloud business is so darn profitable and biggest in the world, growing really, really well. So I'll gladly identify a very desirable business, which is Amazon. Let the market do what it does, which is at times be irrational, and buy shares when the buying is good. That's what I'm doing on Amazon. So as you can see, this exercise of analyzing stocks, you can go through and along the way pick up other investments that you can make money on. And that's what I try to do is when I analyze Meta, go deep, broad, really examine the marketplace they're in, I get to pick up other ideas and other investing opportunities. In summary, for Meta, their AI business could end up being another business that they could put into their portfolio of really, really desirable businesses. I like that they're putting a lot of investment into R&D around their glasses, AI, continue to push the envelope. I'm completely behind that effort. And they have cash coming out of their ears. And if they could put that cash into trying to define what this AI market's going to be, and the whole glasses idea is a good one. If they get a certain rate of adoption there, that becomes a new category. I love owning Meta for a lot of reasons. And I don't want them to stop being an innovative company that just continues to grow. They didn't stop when they had Facebook, and that was it. No, they acquired Instagram, they acquired WhatsApp, and they acquired Instagram at a fraction of what it's worth. They acquired WhatsApp at a fraction of what it's worth. They continue to innovate and innovate. Keep doing that, Meta. That's why I like owning your stock. So that's my review of Meta, and I hope you found it interesting, and I'll wish you the best of success with your investments. Thanks. Thank you for watching my channel. It's been really fun and satisfying to have a channel for a couple of years. I've met a lot of great investors, and together we've really grown. And I wanted to offer you the opportunity to become a member of the channel. It'll give you more access to valuations, research, more access to more videos, the tools that I use, as well as being more connected with me, as well as other members of this channel. There's 4 different levels. Take a look and see if one of the levels is something you'd be interested in. I think you'll benefit from being involved, and I hope to see you soon on one of the member calls or on Discord.